In this video, you'll discover how investing and trading can help you generate returns that exceed the rate of inflation so that you not only protect your wealth, but grow your wealth. What is inflation? According to dictionary.com, inflation is a general increase in prices and fall in the purchasing value of money. Inflation causes the price of our goods and services to rise, and as a result, with the same amount of money we had before, we can afford to buy less of the goods and services. For example, a coffee may cost us $3 2 years ago. Now, the same coffee will cost us $3.50. The $3 we had can't buy us the same coffee now. That is inflation. The same car that cost us $100,000 5 years ago may now cost us $120,000. The same house that cost us $500,000 may now cost us $700,000. You get the point. Inflation is real and it affects all of us, whether we care to admit it or not. Inflation erodes the purchasing value of our money and our wealth over time. If you had $1,000 in 2010, the purchasing value of it would be roughly $750 in 2018. That is what inflation will do to us. Erode our wealth. Many people put their money in banks. They may or may not be aware of the effects inflation has on their money, but putting money in a bank to beat inflation is the safest and most reliable way to see their money erode in value over time. What is the interest rate that most banks are offering their customers nowadays? According to the Federal Deposit Insurance Corporation, or the FDIC, the national average interest rate on savings account in the US stands at 0.09% per year. If you put money in the banks, you are actually losing money in terms of purchasing value. If you had $1,000 in your bank, you are losing around $100 in purchasing value per year. That is certainly not a smart way to spend your money, much less protect and grow your wealth. To put it simply, if inflation is 2% per year on average, we have to find a way to be able to generate returns that exceed 2%. If inflation is 2%, we want to find an asset that can generate 3, 4, 5, or even 10% so that it exceeds inflation. This way, we not only protect our wealth, but also grow it at the same time. While there are different types of assets that can generate such returns to beat inflation, I believe that investing and trading in the stock market is one of the proven ways to beat inflation. Just take a look at most, if not all, the rich and successful people. They all invest or trade in the stock market in one way or another. Investing and trading, when done right, can generate returns that beat inflation. Investing and trading do not generate returns that beat inflation all the time, and sometimes investing and trading might even result in losses on top of inflation. That being said, I believe that if you implement the correct investing and trading strategies, you can beat inflation more times than not. Furthermore, if you do nothing and continue to put money in the bank, you are already losing your purchasing value of your money every year through inflation with almost 100% certainty. There is no one answer. Results from investing and trading differ person to person. However, let's say you choose to invest in the US ETF, the exchange traded funds, which is the SPY. The SPY has a 10-year annual returns of 15.19%. You will not generate 15.19% returns every year. Some years you earn more than that, some years less than that. 15.19% is the average annual returns you would have earned over the past 10 years if you had invested in the SPY. If inflation was 2% annually on average for the past 10 years, you would have generated around 13% in returns after inflation annually. Now, you see why investing and trading can protect and grow your wealth in the face of inflation.